John, great to have you on. I want to get your thoughts. There's so many different factors swirling here. Obviously, what's going on in China is particularly in focus right now. How do you balance that against the meeting of OPEC this weekend?
Yeah, good to be on with you, Morgan. Yeah, these headlines are more like haymakers that come at the market these days, the way it's all going. And it's a difficult balance, particularly as it relates to China, which is really driving the bus here. With this news over the weekend of the expanded lockdowns, and then all of a sudden a pivot yesterday and overnight to the point where, if this is to be believed, China may be moving to a position where they're going to treat COVID like the flu and sort of discount it and I guess take their chances but reopen and let everybody go about their lives and, like I said, take their chances. And that is a meaningful difference to the demand equation here for crude oil if that were to occur. Now, yesterday's sell-off was startling to the market. It was swift. It built upon recent losses, lowest price level, as you guys pointed out, in 13 months, and giving back all the 2022 gains. That certainly got the attention of OPEC, OPEC Plus, Saudis in particular, and there were some headlines, again, a haymaker that hit the market that OPEC Plus would most certainly be considering a production cut, again, at this next meeting. Now, beyond that, and why I'm not necessarily confident that OPEC Plus will announce another cut at this meeting is because the rubber's hitting the road in Europe this month or in December regarding embargoing, finally, Russian crude oil first, and then come February, embargoing of Russian refined products. So things are going to, the crunch is coming, as I've been talking about.
So what does that mean in terms of key levels for crude here?
Well, we've seen twice now that we've gotten, when WTI has gotten down around 75, it gets bought. Clear support. And we tested below it yesterday, and when I look back, on the chart and did some work, it's pretty clear that 60 will be almost impossible to break if things were to really deteriorate in China. But I think really the upside narrative is the one that most in the market are seizing upon. It's the most really, I think, likely scenario that we head back up, especially as we try to sort out this situation with what Europe is going to be doing. So the upside price risk back above 85, back towards 90, and probably triple digits again as we get into the very end of this year into early January is I think, a likely scenario at this point.
Okay. We're going to buckle our seatbelts then. John Kilduff, thanks for joining us.